So on Friday, G-Roar ended up having one loss in the morning. And then from there, Uncle Tio had a loss. And then from there, I decided to wait and trade until later into the day. And I ended up going 2 for 2 with a 100% success rate. I'm going to be recapping the overall trades that I ended up making. I literally ended up buying SPY call options towards the exact lows right before the market was about to close. And I'm going to show you the 30-minute candlestick pattern that I used to do that. I'm going to walk it down to you. You could have made 100% profit return within the span of less than 10 minutes. I'm going to be breaking down the trades towards the end of this video. It's going to be a great educational session, so make sure you stay to the end. First things first, we're going to get into the new money-making levels. If you trade these setups at these overall levels, you should have a phenomenal week. So in terms of the SPY, and this same pattern that I'm going to be showing you here is the exact pattern that I used on the 30-minute chart to trade during power hour. I'm going to be walking you through that towards the end. But what I wanted to bring awareness to you here is the weekly chart. So you can see right here on the weekly chart, you have a weekly candlestick facing to the downside, and then you have a weekly candlestick facing to the upside. So in terms of this overall pattern, you can see it's very similar right here as well, facing to the downside, facing to the upside, right? With this particular pattern, the SPY tends to have an overall bullish week. Now, in terms of like confirming if it's actually going to have that bullish week and confirming if that pattern is going to actually work, from a more like macro point of view, when you're breaking down a weekly candlestick, I like to use the daily candlesticks, wait until the market's closed, and then see how it reacts at specific set of levels to confirm it's going to be a great swing trading opportunity. But I want you to keep this in mind heading into this week. Focus on buying oversold dips at the following levels, right? So if you're seeing a big panic sell, if you're seeing a big dip into the week, it could be a great opportunity to day trade along with swing trading. So keep that in mind heading into this week because we could potentially have a bullish week. Based off of what I'm seeing on the daily chart pattern, we could have some dips and those dips should end up getting bought up. Now, in terms of the levels, this is what I want you to understand in terms of where we are overall at. Right, so I'm going to walk this through. I'm going to break this down here for you. So it's going to be very, very simple. What you're looking at is an overall 10-day, 30-minute chart. So in terms of my main foundation, in terms of like day trading, I use the 30-minute time frame and I use the 1-minute time frame. Those are the two time frames that I use when I'm day trading. But in terms of like patterns, bullish, bearish, trend days, I use the weekly chart. I use the daily chart. But let's get into it, man. So in terms of the weekly chart foundation, it's saying that the pattern could potentially be bullish. In terms of the levels, let's get straight into it. So as you can see, in terms of the SPY, we are currently sitting at a make or break level. Now, in terms of what that make or break zone truly is going to be, you can see right here, it's going to be this 591, right? So the SPY ended up closing at 591.95. You can think of that as your break and retest resistance level. Now, in terms of your make or break support, it's going to be 591. 591 is make or break. As you can see right here, when 591 reacts as a support level, reacts as a bullish floor, when it's holding, when it's consolidating, forming this 30-minute, bullish trend reversal pattern, it likes to quickly spike back up to 595.50. And the SPY does still have a gap that is waiting to fill above at 595, right? That's what this white line represents. If you were to disable extended hours, you can just visually see the gap. It's a lot more clear, right? So you can see the gap right here at 595. So what I want you to understand is, in terms of a gap and go, in terms of a break and retest level, in terms of whenever the fuck the SPY is breaking above this level, dropping back down, reacting as a floor, or just consolidating, forming bullish 30-minute candlestick confirmations above the 591, the 592, right? The resistance break and retest, that's when it's going to close the gap. Once the gap builds, that's the make or break middle gap. So if 595 reacts as a resistance, we drop back down to 593. If 595 breaks out, reacts as a support, the next level we go to 597.70. As you can see, that's make or break. If it reacts as a support, breaks out, we start uptrending to fill the gap at 601. If it breaks down, reacts as a resistance, we start downtrending to 593, right? The true best level to buy put options is going to be at the all-time highs with the highest gap that's waiting to fill above where the SPY can have a gap close reversal, which is going to be at 600 and 130. Now, in terms of what you need to understand, right? Let's say the SPY is having a negative reaction and the bears are starting to take some short-term control. What would need to happen in that situation is we would need to crack below 591. If we crack under 591, spike back up, form lower highs, the SPY is going to start to sell back off into the 587 support level. In terms of best dip buying levels, if the SPY is reacting bearish, I need you to keep an eye on 587s. We've been having a lot of strong bounces at 587.50 range. In terms of some other key critical levels, this is what we call a gap breakdown. So when a stock has a gap up, wait till the market closes, take the low of day. So right here, the SPY ended up having a gap up. The low of day is going to be 586.43. Once it drops below this level, spikes back up, reacts as a resistance, that's when it starts to fill the gap that's waiting to fill below at 584.64. So a gap breakdown is a special level where once this support level cracks, there is no support. So it's going to start to fill the gap. Once it fills the gap, it's going to try to have a reversal. And these previous resistance levels right here as well, gap and go break and retest, can react as a support level as well. So typically in this situation, man, the SPY is definitely going to try to bounce first at 586.40. But if it does react bearish, the next level to buy calls is going to be at 584.70, right? So again, just quickly breaking it down to you, I gave you the ladder. In terms of the ladder, it's going to be 601.40. Next level is going to be 598. Next level is going to be 597.50. Next level is going to be 595 gap reversal. Next level is going to be 592 make or break resistance breakout and retest gap and go once that occurs. Next level is going to be 591. Next level is going to be 586. Next level is going to be 584, right? And then in terms of the calls, if we're reacting bearish up here, or if we're just having a big sell-off, you're going to want to be looking to buy calls at the oversold levels, 584.70, and keep an eye on 586 to 587.50 range. And then 592.50 is your make or break resistance level. Break above, drop back down, react to support, buy calls. If it's reacting bearish, it's going to start to sell back off towards 587. Once 592 finally establishes as a floor, as a support on the 30-minute chart, that's when you're going to see the gap that's waiting to fill above at 595. 595, make or break middle level. If it reacts bearish, we drop back down to 593. If it reacts bullish, we explode up to 597, another make or break level. Reacts bearish, drop back down to 595. Reacts bullish, spike back up to fill the gap. Best level at 601.30. So use these levels. And as a trader, you need to be self-sufficient. So when the SPY is trading at these levels, it's best to wait a little bit. A huge unfair advantage to have as a trader is to wait. I'm telling you, if you just wait to trade later into the day, I find it a lot more easier, because one thing you need to understand about levels is they take time to play out. A lot of the times, the level is going to take 60 minutes to 2 hours to have that move. So in between that 60 minutes to 2 hours, there's going to be a lot of chop, there's going to be a lot of theta decay, but in between that time, I'm simply analyzing and looking if it's reacting as a floor or if it's reacting as a roof, as a resistance, right? I'm telling you, if you give things time and wait for the chart to play out and miss out, in a sense, on the first couple hours, it's like a good time, to really start looking would be like towards 11:30 a.m. And then the best time to trade would be towards that power hour trading session. That's when I prefer to trade best. I just find it in terms of an edge in making trading a lot easier, especially from like an educational point of view. For those of you who do trade using technical strategies, I found it to be a lot easier to trade and confirm that key levels will work in terms of like the best confirmation if you wait for the chart to develop and you wait for certain patterns, and the length of those patterns could be 1 to 2 hours to form at those overall key levels as a confirmation. So make sure that you're using the 30-minute candlestick patterns that I've been teaching you to confirm if the level is going to be bullish or bearish, and you're looking to identify if it's forming a bullish pattern or a bearish pattern, if it's forming support or if it's forming resistance towards the overall levels. Wait for the simple money, easy making setups, man. This pattern happens all the time. So in terms of like a great confirmation, you can clearly see in terms of the SPY right? There was a lot of resistance. You see all of this resistance right here in terms of the SPY at 590.50, 590.50 sell-off, 590.50 sell-off. Well, once it finally has this gap up and we have a slight break above the resistance, you see how it's at 591 now. It's having a slight break above the resistance. Look what starts to happen. It's forming a floor. So I'm showing you a perfect example of a great confirmation to be buying calls, and you can use this pattern, use this confirmation for the rest of your trading career. So you can see right here, this is resistance. You see the roof, resistance, 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 top wick, top wick, top wick, top wick, bottom wick, bottom wick, bottom wick, bottom wick. This is all support. This is a floor. This is a roof. Break above the roof, drop back down. The lows of these 30-minute candles are slightly above the previous resistance, retesting, holding for 90 minutes. This roof right here is now a fucking support level after breaking out and forming the green, red, green pattern. Very, very bullish in a sense. And I did end up, so this was my first trade on the day. I'm going to walk you through this. And again, this is going to be that pattern. Keep an eye on this pattern. The same pattern I showed you on the weekly chart, I ended up using this on the intraday chart. I could have used it again. I'm going to walk you through this, man. So in terms of my trades, because like I said, on Friday, I was the only one within the team to go green on the overall day in terms of like, you know, alerting the trades. I went 2 for 2. But I'm going to walk you through this, man. So with that being said, in terms of this trade, let's get into it. As you can see, at 12:33 p.m., I ended up buying 591 calls at 59 cents. Why did I buy SPY call options? Because there was key resistance right here. I noticed that there was resistance on the day slightly under this previous 2 days resistance, right? And I noticed the SPY was starting to break above the resistance. And if you go back throughout, like the last 2 weeks video, you'll see this pattern. The SPY had this like red bearish candlestick facing to the downside, and it was already breaking out and forming higher support and retesting. So when this pattern particularly, forms, it tends to spike back up and retest the high of this wick, which is why as the SPY was dropping on the 1-minute chart, I figured it was going to be a bullish 30-minute candlestick right here. So I was buying calls, playing for the bullish 30-minute candlestick confirmation. And then another opportunity to get back in on calls, which I did not take advantage of, was to simply get back in at 1 p.m. because it was a green, red, green, previous resistance reacts as a floor. So just use that overall, use what I just taught you. You can see right here, this is the same thing. This is another reason. You see how this is resistance, right? So you see how this is resistance. SPY starts to break above resistance, higher floor, and then the next 30 minutes is green. You're going to see that happen a lot, right? Next 30 minutes is green. I talk about this all throughout my videos. So you got to understand, this is a 30-minute candlestick system, waiting for 30-minute candlesticks to close, waiting for chart patterns to develop, using the 30-minute chart, using the key levels that I give you in these videos, along with the new levels that form during the extended hours trading session, pre-market, during normal trading hours when massive moves occur, right? But a great foundation to truly have as a trader is going to be that 10-day, 30-minute chart. So that was the overall trade on calls. I ended up selling that perfectly. So I got in at 59 cents a contract, and I ended up getting out at 73 cents. I said, I took what the market gave me. This is what the market gave me. It is what it is. The plan was to hold the trade for 30 minutes. If I would have held it longer, it would have been over 150% profit return. But anyways, man, in terms of the next trade, it was a lot better. And it's the same exact pattern on the weekly chart. And I'm gonna walk you through this. So in terms of this trade, as you can see right here, this was the final trade that I ended up making on the day. So 11 minutes into the close, these calls went up 150% plus. So I bought these SPY 591 calls at 45 cents a contract at 3:49 p.m., expecting the 30-minute candlestick to have a strong bullish close, right? So why was I expecting the 30-minute candlestick to have a strong bullish close, right? And then in terms of those calls, I ended up selling at 62 cents a contract for like a 50% profit return. But if you go back and you simply type in never failed, this particular pattern tends to repeat all the time. And it's currently happening on the weekly chart. So, these same patterns that you're seeing can work on multiple time frames. This pattern, I use this one a lot as a day trader on the 30-minute time frame. I'm currently seeing the same pattern on the weekly chart, which means it could be potentially a weekly bullish week. But it's a little bit different. You got to break it down by the time frame. If you're using a weekly pattern, the way to break that down is to use the daily chart. Use the daily candlesticks to confirm what can potentially happen the next day, if it's a bullish or bearish trend for the next day. And then you break that down as a day trader. In terms of my time frame, is the 30-minute and the 1-minute time frame. But if you just look right here, candlestick facing to the downside, candlestick facing to the upside. So as you can see right here, in terms of the SPY, you have previous resistance right here at 591. You have a break above the resistance. It drops back down and it's forming a floor slightly above the previous resistance. You see how it does that? When the SPY breaks above the 30-minute resistance, it drops back down. It forms a higher floor slightly above the previous resistance. And in terms of the pattern, man, if you just compare the left to the right here, you have a candlestick facing to the downside on the 30-minute chart. You have a candlestick facing to the downside on the 30-minute chart. You have a candlestick facing to the upside on the 30-minute chart. You have a candlestick facing to the upside on the 30-minute chart. If you go back and you watch all my videos, you're going to see this is the same exact strategy I use. This is what the pattern looks like, and I'm using this pattern at my key levels. And in terms of the bottom of this candle right here, the best place to use it is on a break and retest, right? So the SPY had resistance here. It had a break above resistance. It retested, and the retest was the bottom of the overall pattern. It's a 1-hour pattern, 30-minute down, 30-minute up, 30-minute down, 30-minute up, right? And then you can see the next 30 minutes tends to be very bullish. So what I do is I scale into the dips when the next 30-minute candle looks bearish and it looks red because it's supposed to flip bullish. And surely enough, you can see the SPY had a massive dip. So this 30-minute candlestick ended up opening at 591.93, and it dropped almost $1 to 591. So when it was dipping, I told myself it's going to have a strong bullish close. It's time to buy the fucking calls. So as this was red and bearish, I was expecting the 30-minute candle to flip strong bullish close with this 30-minute pattern to play out, just like how it played out in this particular situation, right? And the weekly pattern on the SPY is currently the same exact pattern in a sense, right? It's not the same color, but it is the same particular pattern. You can also say as well, we have some previous resistance right here, reacts as a support, reacts as a support. So we'll see, man, but SPY likes to retest the high of these wicks, especially within this overall bullish market as of now. And, that's why I made that particular trade on the call options, right? So I'm just breaking that down, explaining to you exactly what it is that I'm doing. I'm telling you, if you just wait for the chart and trend to develop for a couple hours at the key levels, and then you wait for the best confirmations, certain trend reversal patterns, certain floor patterns, certain resistance patterns at the overall levels, you should absolutely fine, man. So just remember, never blindly trade a level and never blindly trade a bias. Make sure that you are using confirmations. So I do have strategies, like in terms of a strategy, the SPY can potentially reverse at the gap at 595. Now, in terms of what I know, it's more likely to work and reverse at the higher gap, the more overbought level, right? But that doesn't mean that it's going to happen. You have to actually trade using a confirmation. These particular strategies can be like a foundation, but don't let a level or a strategy ever blindly bias you into making a trade. You can have certain strategies that are bullish or bearish, but if the price action and the confirmation and the patterns at those specific levels and strategies are saying otherwise, then in most situations, it's best to go on the other path or just sit out. You can have bullish confirmations right here at 601 and the chart could be screaming bullish, but maybe you don't want to buy call options because it's just a little bit too overbought for your taste. So you sit out instead and do nothing, right? So there's things you have to understand psychologically. But just always make sure when you're using my money making levels that you're waiting for the chart to develop. I told you with the 30-minute chart, it's best 60 minutes to 2 hours, man, is a great wait time at the levels. And use the best 30-minute confirmations, man. And in terms of like how you can literally create, like one of the ways I created my curriculum was analyzing the history of how the SPY would react. Just look throughout the history. Okay, what does the chart on SPY normally look like on the 30-minute time frame when it bottoms? What's the perfect confirmation when it breaks out, drops back down to retest, it keeps on going higher? What does it look like? What's the perfect picture? And you start going back throughout the short-term history and you'll start seeing patterns. Wait for certain patterns to overall develop, right? Buys on a bullish uptrend, red candlestick facing the downside, next 30-minute candlestick is bullish. Buys on an overall uptrend, red candlestick to the downside, next 30-minute candlestick is bullish, right? Start capturing trends, start capturing patterns with the 30-minute chart. Never blindly enter into a trade at a key level with a bias and a strategy in mind. Okay, I have a strategy, break and retest, it's going to be bullish, let's blindly buy into calls. Don't do that. Use a confirmation. What is the chart's development telling you at the overall level and strategy, right? A strategy and a level can make you biased in a way in certain situations, but you're going to want to use a confirmation at all times and do what makes sense to you. So with that being said, I just wanted to break that down for you and explain to you in terms of, my current points of view on the overall market and on my trading plan heading into the overall week, man. So in terms of one thing I did want to add, you need to pay strong attention to previous day highs and previous day lows, man. So basically, in terms of what I'm seeing, man, I mean, if you look right here, this red daily candlestick looks very similar. This crunch looks very similar. This crunch looks very similar. Previous day highs and previous day lows are crucial for trend reversals. If we react bearish at 592, it's going to be a quick scalp on puts. Day trade puts, if we're reacting bearish, SPY goes under 592, spikes back up, reacts to resistance, forms a lower high, try put options. If we drop back towards previous day lows, 586.50 to 587.50, try call option. Now again, use confirmation. But based off what I'm seeing on the daily chart pattern, we could potentially drop towards previous day highs, potentially bottom towards previous day lows, but then overall this week we start to go up. If you just look at this overall chart, man, from a wider point of view, I'm seeing a lot of similarities compared to this left, compared to this right. So with that being said, I'm going to be signing off. For those of you who do want to be a part of our secured private organization, it's going to be the first link down below within the description. If you would like to join us, and in terms of what you get access to, you get access to our trading community. You get access to our real-time zero-date options trading alert system. There tends to be trades all day. Market open trades tend to be the absolute best. And then trades in the middle of the day, and then trades in the power hour day. So it's literally a trade alert system that tends to just run all day. And with that being said, it's the first link down below in the description. What we're known for doing differently is we buy cheap, far out of the money option contracts. We're known for selling them deep in the money for the biggest percentage gains. And, it's just very simple, man. We have the most successful win rate in the game trading 0 to 8 far out of the money option contracts. We have the highest win rate, and we're known for making the biggest percentage gains. And in terms of risk management 101, what we do differently is we don't use stop losses. So in terms of everything we're putting into the trade, that's our entire max risk per trade. Every trader has a max risk per trade. The most you're willing to risk on a trade could be a couple percent of your account. So your R multiple, your max risk per trade, is everything you're putting into the contracts. So the most you can lose is what you put in, and what you put in is your max risk per trade, a couple percent of your account. Obviously, if you have a small account, you're going to have to risk more. But I'm telling you, I've seen people come in here with small accounts, and they're just fucking crushing it, man. We had a guy come in here with like $300, and he flipped it to over $4,000, man. This was insane. This was one of the best results I've ever seen with a small account inside a Team Roar. Literally, like their first week, they turned $300 into over $4,600 in terms of an account starting that small, man. So we don't use stop losses, but we do use profit stops. We use profit stops to ensure that we get stopped out for profits. We don't go green to red on a trade. So when you're up 10 to 20%, that's a small win for us. We tend to set profit stops, and we tend to add to winners. The reason for adding to winners is when we win, we tend to win big. So when we're up a little bit and we see a winning confirmation to add that says we're going to be up a lot more, we like to add to the winners, and then we set the profit stop to protect our new average cost, our new exposure of risk into the market. And we move the profit stop up higher to ensure that we don't get back the bulk of our gains, right? We don't want to get back the bulk of our gains if the market doesn't move against us. And then we sell into the moves, and we always look to leave runners to sell deep in the money. So we're playing a different game, man. In terms of our system, we never get stopped out on a trade. We rarely sell for a loss. We focus on trading the trend, And when we're right about the trend, we're going far out of the money, but you know, close enough to where we sell it in the money. As long as we're right about the trend, those contracts tend to go in the money. So if you just hold the trades, even if you don't time it perfectly, it should still be a 100% plus win. And then when we do time it perfectly, it tends to be massive wins, multiple 100% profit returns, 1,000% plus profit returns. And then in terms of losing, when we are down on a play, this is called a dead play. We don't get stopped out, but if we still believe, if we're on the right side of the trend, or if we see another play, we go to second strike. And that second strike, as we're holding the first one, that's down like 50 to 80%, it tends to be at the exact lows and it tends to be a much better trade. So we'll typically look to size in a little bit higher on that second strike. Because if we're going to be wrong in terms of the timing on the first overall trade, once the right side of the trend kicks in and we buy that second fucking strike, it tends to be near fucking perfect. So it's just a little, hack you can create in your trading system. Instead of adding to a fucking loser, you can buy a second strike and you could size in a little bit heavier, maybe 25, 33% more, maybe 50% if you want to play a little bit riskier. But size in a little bit heavier because the trade is expected to be much better and timed perfectly. And that trade tends to go up like a fuck ton. It tends to go up a lot. And the one before that, still tends to be a winner as long as we're right about the trend. So like I said, man, this is very disruptive. And you're really going to start to see that this is an actual trade alert money system. This isn't just buy and sell alerts. This is very strategic in terms of the money making systems that we create, along with the educational system that we create. I mean, in terms of my educational system within this video, I kind of went over some of the basics, didn't go over the full thing, but it should help you in terms of using the overall levels and what to look for, right? In terms of giving you some information on creating an educational system. I'm telling you, one of the best things you can do is understand that history tends to repeat. So you're looking for short-term history as a foundation to be repeating at specific levels. You're looking for certain patterns. Okay, how does SPY normally react throughout the past 10 days when it bottoms? What do the 30-minute candlestick looks like? Oh, it just looks like, it looks like that here. Oh, now it looks like that over there. You'll start to see patterns pick up. Pay attention to like the 10, 20-day, 30-minute chart and look for patterns. How does SPY normally reacts when it bottoms? How does SPY looks when it bottoms? How does SPY look when it tops? And then look at those patterns. And then later on throughout the next week or two, you're going to see the same patterns tend to happen again. What I love about SPY is not only is it extremely, have a lot of liquidity and everyone's trading options on it, right? But it's the predictability. Another way to have an edge in a trade system and to create an unfair advantage is to is to trade one ticker. If you trade one ticker, you get to learn that ticker. It's just not all tickers are created equally. Some tickers don't have thin option chain. They don't have thin option spread. Some tickers don't have 0-date options expiring every single day, which is what we trade. SPY has 0 dates every single day. It wasn't too long ago where that wasn't the case. Market's changing. Now there's 0 dates every single day on SPY. Now there's a lot more volume on the SPY. But there's still a large portion of the world who's still sleeping on options. Best time to learn this skill set is now. You will get left behind, man. I'm telling you, the best time you could genuinely learn this skill set is right now, man. We've already had members. We have hundreds of members who've dedicated over 15 months staying subscribed inside of Team Roar. They're learning, they're making money, and they're still subscribed with us and a part of our community. It's like a couple years down the road, you're going to see they're going to be a lot better than people who just joined now. Like if you want to have an unfair advantage, part of having an unfair advantage is to just start, is to get started right now, man. So, SPY has an extreme unfair advantage. In terms of trading it, what I like about it is it has a lot of liquidity, spreads are very thin, has 0-date options every day, but it's the predictability. I am telling you, if you use my levels and you use the information I'm giving you, so just look to see how SPY normally reacts on a 30-minute chart, when it bottoms, when it breaks and retest, when it tops, when it breaks down and retest. Look at 30-minute pattern, right? If you see the perfect pattern that's repeated in history at a key level, take advantage of that, capture that trend, milk that trend in real fucking time, man, along with the strategies I'm teaching you, the gap reversals, the 30-minute candlestick chart confirmation. I'm telling you, man, I've tested every single fucking time frame as a day trader. I have this foundation where I'll look at a weekly chart, but it's mainly the daily chart. Daily chart is a good foundation. Look for daily chart patterns to help identify if it's going to be a bullish or bearish trend day, and then just break down, micro break down the daily candles and the 10-day, 30-minute chart. using the new levels and just waiting for the perfect confirmations. Like, do you see how I waited? That trade that I made at the very end of the day was a perfect confirmation. I'm telling you, it's so much easier to trade when you just wait for the chart to develop. Not even the chart. When you just wait for the key level to develop. If SPY is sitting at a key level for 1 to 2 hours, that's when you're going to typically see, for those of you wondering when the big move is going to happen. In terms of the very latest, usually no more than 2 hours. If we're just sitting at a fucking level for 2 fucking hours, you're looking to see if there's a bullish or bearish pattern, if there's a trend reversal pattern, if there's a floor or a roof. If not, then just sit on the fucking sidelines. But even if you miss out on that first move, break out and retest, break down and retest. Like, there's so many fucking patterns, man. Green, red, green, previous resistance reacts support, buy calls here. This was another confirmation. Buy calls here. I took advantage of the first one. Facing down to the downside, facing to the upside, previous resistance reacts support. It's just so fucking simple. But you have to have self-control and you have to be disciplined. Within this market, if you don't have a foundation, if you don't have a key levels, if you don't have curriculum, if you don't have self-control and discipline, if you're not willing to wait to trade the best levels at the best setups, you're not going to be able to survive within this overall market. And you need risk management, man. I mean, in terms of Team Roar, this is an all-day money-making alert system, which means there's going to be people in here, depending on how they use our system, that's up to them. We can't control, in terms of the decisions that they make. Some people, they have high risk tolerance. They take massive position sizes on small amounts of money, but they can afford to keep refilling their account because, they're risking a large portion of the account that's in there, but they have a lot of money where they can just keep on, just instilling more in their account, right? Let's say you have $10,000, but you're only putting in $500 into your account. So you just refill it $500, $500, $500, right? And then you cash out at the end of the week or at the end of the month. But the point is, people use systems a different way. There's many trades inside of Team Roar, and there's some days where if you combine all of our wins, so like 3, 6, 7, 10 wins in a single day in a row, and if you add up all the percentage gains, it's 1,000%, 1,500%, 2,500%, 4,000%. And then, some people, they'll just keep on compounding their fucking account that same day, and they'll literally turn like $300 into fucking $4,000. I mean, Uncle Tio, he had this one trade. This was insane, man. He finally, Uncle Tio is finally off of the winning streak. It lasted all the way up until, literally January from October, man. It's fucking crazy. But in terms of this situation, man, look at this. This is the potential, man. It's just crazy on what you could do, because I've seen small accounts in here turn a couple $100 into $10,000 in a single fucking week. I've seen it, But like I said, there's a lot of different things you can do, man. But he had a trade where, let me find this, man. It was like, I think it was a 1,700. Yeah, it was a 1,700% return. So he sold the majority of his position when he was up 350%, and then he just left one runner. He put in $170 at 10:20 a.m. and he held it for 2 hours, and it was a 1,700% return. He literally turned $174 into $3,000 within the span of just 2 hours, man. And on that day, we had so many more massive fucking wins. Like, I'm telling you, what you can do is crazy. So spend some time thinking about, how you want to use this overall system. Like I said, man, there's some people, they'll have $10,000, they'll leave 9,500, and there's some people who want to trade with $10,000. But what they'll do is they'll put in like small amounts, $300 or $500 into their account, and then they'll save the rest in like a savings account, right? And they'll just trade with small amounts of money, and they'll just try to run it up, to large amount, taking big risk on their small account size, right? Because it's a small portion of their overall account, but they're only trading with a small portion, right? Some people do it that way. You can experiment with that. And then they try to turn a couple $100 to a couple thousands of dollars, within a week or within a month, right? So $10,000 instead of trading with $10,000, they keep 9,500 in a savings, trade with less than $500, right? So one of the disadvantages to that, obviously, is going to be less of a cushion, and you can easily blow up the count, but it is a smaller amount of money. I'm just giving you some ideas, man, because like I said, I see some people come in here, a couple $100, they flip it to thousands of dollars, they cash out, and then they restart with a couple $100. That's one strategy. There's other people, they want to take it more serious, more educational point of view. They want to have an actual sense of risk management, which means, you're not going to be taking massive risks like that. It depends on how you look at risk. If you have a $10,000 account and you're only putting in $500 to trade with, if you lose $500, it's not a massive fucking risk. but they take massive risk in terms of trying to flip that $500. They can easily just blow it up because they're taking massive risk on overall trades. Then there's some people, they trade with $5,000, $10,000. They'll trade with their actual full account size, right? And in that situation, like I said, I would just focus on the max risk per trade. Risk like 2 to 5% of your account. And in terms of like if the contract goes to zero, you lose a couple percent of your account in that situation. And then focus on adding to winners. Focus on taking a slightly bigger position size on that second strike we enter. If we're down on the first, the second one should hit. Because in terms of losing streaks, it's very, very rare inside of Team Roar that we have more than 2 losses in a row, right? So like I said, just in terms of indications, second strike tends to be a great trade. We rarely go on losing streaks. It tends to like never happen. So if we do have a loss, well, you can be excited for the next potential trades, right? And just never setting a stop loss. I'm telling you, if you set stop losses on 0-to-8 option contracts, you don't have a chance. So you need to let the percentage gains in holding the trade make the money for you. Understand? Don't go taking massive risk, and don't go using fucking stop loss. Big percentage gains in smaller position sizes allow you to hold your trades longer with stress-free. Best part about options is you know exactly how much money you're going to lose when you put into that option contract, right? And in terms of what you're putting in, like I said, it should be your max risk ideally, unless you're, one of those people, you're just trying to flip a small amount of money very, very quickly. You don't care if you lose it because one out of those 10 times it's gonna hit fucking big. When it hits big, boom, you have the money to reload, and then you start with a small amount. Like I said, there's a lot of different risk management strategies. Some people take it seriously. They try to like compound the account slowly, and then they cash out weekly or monthly in a sense, and they try to grow their account smaller. It takes more time to grow, right? But we all have time to trade. We all have time to survive. Just do what's best for you and do what's, most comfortable with you, man. So just some things I wanted to point out, just open you up to some different types of risk management styles that I've seen within overall trading, man. But I'm telling you, percentage gains wise, you just can't go wrong inside of Team Roar, man. Like if you have a 1000% gain and you're sizing in accordingly with the R multiples, like I told you, you can literally lose 9 trades in a row at 100% and still be profitable. This is why you cannot beat percentage gains. Percentage gains is the foundation to surviving and being successful within the market with an extremely low win rate and not risking a lot of money. And the only way to get these massive percentage gains is to trade cheap, far out of the money option contracts and to hold your trades for longer periods of time. And to eliminate that stress of holding a trade for a longer period of time, you're going to be sizing in smaller. And to increase your winnings, when we're down, we're going to buy the second strike. When we're up, we're going to add to the wins to protect our new risk amount since we're adding to the winners to increase the gains. We're going to set the profit stop. For those of you who are serious about joining my secured private organization, it is going to be the first link down below within the description. We are going to absolutely crush it heading into this week. I will see you guys within the chat tomorrow.